been a banner year for stocks as the economy continues to gain steam heading into 2026. Welcome to the Big Money Show. I'm Taylor Riggs, along with my co-hosts Cheryl Casoni, Jeff Flock, and also with us for the hour, Luke Lloyd, President and CEO of the Lloyd Financial Group, and also for the hour, Adam Johnson, Bullseye American Ingenuity Fund Portfolio Manager. Great to have everyone here today.
Let's rock and roll.
Let's rock and roll. Treasury Secretary Scott Bessent says Americans can expect gigantic tax refunds early next year. This is all as the Trump administration looks to keep that holiday spirit alive. The White House is pushing to take advantage of strong growth and use tax relief to keep the boom going.
I would say to people, I like the idea, stay the course. I remember when Reagan said that in late 1982, and then we had the biggest boom in American history. I think that's exactly what we're headed for in 2026 with the tax cut really kicking in.
All right, Adam.
Yes.
Merry Christmas. Happy New Year.
Thank you.
Do you buy that? Is there sort of enough of that momentum to get us through to the first quarter, the first half of next year, when Americans can really start to feel some of that relief?
Oh, you better believe it. It's been very choppy over the past couple of weeks, arguably the past couple of months. I think because of the AI trade, right? I mean, the AI trade was what got everybody so excited. And then we started thinking, wait a minute, we're spending a lot of money on AI. Are we spending too much? Actually, no, we're not. And AI stocks are very expensive. Are they too expensive? No, they're not. And I think we're just working through that. I call it sort of China DeepSeek 2.0. Remember about 9 to 10 months ago, everyone thought, oh, China's DeepSeek is going to steal the mantle of AI. And we realized, no, they wouldn't. But it took time to work through it. I think we're working through it now. As we look forward, we have strong GDP growth, strong earnings growth. There's a lot more to like than to fear. So, yes, I'm fully invested.
Cheryl, I wanted to come to you on that similar. I was reading a note from Evercore, and they, too, believe that all of the, AI bubbles are really overblown. Mm-hmm. They're looking at some of the flags, and they just see, they do not see AI systemic risk out there. They think that that call is way overblown. They said hyperscalers, that's sort of all the big tech that we talk about. On aggregate, balance sheets are really healthy. We've talked a lot about the debt spend, but overall, there is still more cash than there is debt overall. And again, so how much of that really fuels the optimism for GDP, which right now, a lot of GDP is AI data spending.
Mm-hmm. It is. And there's a lot of good news to go around. Unfortunately, Stephen Moore, who we just saw, has described this as, perception versus reality. And the reality is that 160 million Americans are in the stock market. And we've had an incredible double-digit return year for every major indice. If you look at the average incomes, the median family has gained $1,200. That's adjusted for inflation. Secretary Bessent has said in 2026, you're going to get anywhere from $1,000 to $2,000, the average American will, more in your tax return. That's thanks to the big, beautiful bill, which is retroactive to the beginning of 2025. So it's the 2025 tax year. And also in the big, beautiful bill, the act, which I can't seem to say for some reason, is all the small business pieces of that, whether it's R&D, deductions that you can claim, vehicles, et cetera, et cetera. So, it's interesting that President Trump is now talking about pricing. Not affordability, but he's talking about pricing. And I think that's where the administration is really going to focus. And I think that's going to be another net positive for 2026.
Jeff, you've done a lot of reporting, around the Northeast corridor. And Cheryl brought up a good point. This has been a perception issue. Prices have not come down on day one for everything. And so I think a lot of people out there are wondering, prices are still too high. My wages, real wages, adjusted for inflation, are positive, but I'm only starting to dig out of the big hole that I dug ourselves into in the last 4 years. Is this more of a messaging issue, and how do you think the administration can do that into next year?
It is partly messaging, but everybody sitting on this panel is in the stock market. Most of the people watching what I'm saying right now are in the stock market. Mm-hmm. But there is a huge chunk of America that is not in the stock market. And they have not benefited from all of this that we have benefited from. I go to the store and I see prices higher, and it's like, well, okay, not a big deal. I could spend a few extra bucks on this or that. A lot of people don't have that luxury, and those people do vote, and they may well vote in the midterms.
Yeah, midterms is something, Luke, I want to come to you on that, where we always talk about, I would bet on U.S. over China any day of the week. The only concern that I get is China goes on 100-year cycles, and we're going on a 2-year midterm cycle. And so we're up against an artificial clock in a way to get things done. Now, that's good urgency. I want to talk later in the segment about a big, beautiful bill 2.0 that maybe we'll get early next year. But again, how much of that urgency really is needed when you look at the economy, but also the stock market?
Well, let's talk about the big, beautiful bill 1.0, because that kind of factors a lot into this. The economy wins elections. It matters what's happening in your pocketbook for midterms coming next year. And when you're talking, everyone put it extremely perfect here, so let's wrap it all together. CPI is trending towards 2.5%, GDP is at 4%, real wage growth is finally positive, and what I fully expect next year is actually more wage growth, and I think that's going to finally hit people's pocketbooks. I know it hasn't been great for the worker at home, but the reason being is if you look at the big, beautiful bill, bonus depreciation. Cheryl, you were hitting on R&D expenses and bonus depreciation. When you take a look at that, that's going to greatly help every business owner out there. Now, I got a lot of flack on Friday talking about Reagan 2.0. Yeah, I think you guys posted that on YouTube. There's a lot of comments on there about me saying Reagan 2.0. I'm also going to get a lot of flack for saying this. Trickle-down economics works, okay?
I liked Reagan.
Trickle-down economics works, and when you're a business owner, your wealth is tied in the success of the business, not income. Most business owners I know, myself even included, I don't pay myself. I'm trying to grow the business. I'm investing into more software, hiring people, better things for my my clients, right? So every business owner is thinking that same exact way. When they have more money in their pocket next year, they're going to be spending that money throughout the economy, not pocketing it themselves. Trickle down works, and that's what we're going to see next year. Real wage growth positive, maybe even trending towards 4% when inflation's at 2.5%.
Let me give the specifics because I just found it in my notes. So in the big, beautiful bill in the small business and taxes for 2026, 2025 tax share, full same-year deductions for research and development expenses, 100% capital expensing for equipment and owned, not leased company vehicles. I think that's a big story for a lot of transportation companies across the country. And again, this is retroactive. And I think that's, Jeff, to what you were saying, is that maybe a lot of people aren't feeling it, but they will in this. I mean, small businesses employ half of the country. That's half the jobs in this nation, right? I mean, wouldn't that be helpful?
Oh, I think unquestionably. I mean, you talked about, though, the lead time, 2 years as opposed to 100 years or whatever. We're the three biggest countries in the world, right? Us, China, Russia. We're the only democracy. We're the only one who has to answer to voters every couple of years. Those guys can plan, I guess, into whatever. I mean, those guys have been around forever, probably will be. I'm not sure who's better off, but I kind of like where I am.
We are.
The other thing
We're
is
better off, right?
Housing prices. Everyone's housing prices to come down. But on the other side, my clients are boomers or Gen X. They have most of their wealth in their house. 70% of America's wealth is in their house. So inflated housing prices is actually good for the economy in some ways. I know that's also a contrarian opinion there, but it is, because when someone's wealth is in there, they can borrow against it or use that wealth for some other purpose.
But you got to get into a house, and that's the problem.
And that's the problem with my younger generation.
Yes, exactly. And my daughter's the same deal. I bought a house in 1981. I was making minimum wage. And I saved money, and I put it in a Band-Aid box, and then I went and had enough down payment for a house. I don't think it's somebody making minimum wage today, and where they won't.
No. Adam, the good news, pending home sales in November came out this morning. They jumped to the highest in nearly 3 years. This is as rates are starting to come down. I think the latest Freddie Mac was like a 6.18%. So we're getting closer to a low
under
6,
6.25. Yeah,
maybe closer to a 5 handle. And the Realtor Association said housing affordability is showing signs of improvement. Is that also a step in the right direction?
Oh, you better believe it is. And here's why. Housing is about 1/3 of the consumer price, or CPI, calculation. And that's how we look at inflation. So CPI is now down to 2.6%. The target is 2, was as high as 9.1, which is just frightening when you think about what happened back then in 01. So 2.6 going the right direction. If we can start to see more houses come on the market, right? And people haven't been willing to give up those 3% mortgages. But as mortgages start to come down, you start to loosen up some of that housing stock. People say, well, I hate giving up my 3, but you know what? I could afford a 6.1 and I need a bigger home or whatever. You bring more supply on the market. In theory, that should help prices come down a little bit. And as prices come down, that helps the CPI get back down towards 2%.
I love the portable mortgage idea.
Do you?
I love it more than I love my cat. Honestly, I do.
Cheryl.
Yeah. This is big.
No, I love cats.
Can't talk about Milo like that.
Sorry, Milo. No, I think it's such a brilliant idea. That, I think, will unstick the housing market.
I would
really
love to
believe
see, and I think this is actually a likely scenario, housing stagnates. We don't want to see a drop. Again, for the reason I just brought up before, we don't want to see a big drop in housing. We want housing to stabilize and not go up, essentially, while wages outpace inflation over the next 4 or 5 years. And that's how you have that disconnect come back to a median.
I want to talk about something that has been volatile, to say the least. Pull up the price of crypto. Look, I think overnight, Bitcoin had topped 90,000. Now we're back to mostly kind of unchanged on the day. We're still around 87,000. Adam, I know that you like this and express it through a play on Coinbase. How do you view the volatility? And again, 88 is not 110, 120. But it's not 60 or 50,000 either on Bitcoin.
Thank you. That's right. Well, remember when NVIDIA, call it a year ago, went to 135 and then it plunged, as they said across the media, to 85. People thought, oh my gosh, is it all over for NVIDIA? No, of course not. And NVIDIA went on to more than double, actually almost triple, going above 200. Now it's about 185. That's the way markets work. It'd be great if they went up every day. But bonds do that, stocks don't. Or in theory, bonds do that, at least over time. So you just have to be willing to sit with high quality companies through the volatility. And for me, in crypto, that means 2 companies. It's Coinbase, which is the largest and easiest way to effectively make a statement about crypto, that you like it and you want to be part of it. Blackstone, for example. Blackstone, BlackRock use Coinbase for all of their institutional clients who trade crypto. So it's the back office for the world's largest money managers all over, literally all over the world. So Coinbase, I think you have to be there. And Circle is very fascinating. They are the largest issuer of U.S. dollar-backed stablecoin. And whereas Bitcoin prices move all over the place, stablecoin does not by definition. It's backed 1-for-1 with U.S. Treasuries. So if you were a bank and you need to move money quickly, your Bank of Mitsubishi Tokyo branch needs to get $100 million worth of yen into the New York branch. Currently, you have to have $100 million worth of yen in Tokyo and $100 million worth of dollars in New York. You tie up that regulatory capital. You attach it to a stable coin, it instantaneously moves, and you have cut your regulatory capital in half. You're holding treasuries.
If Dakin were here, she would try to make you put a run on your money when it comes to strategy. I think formerly known as MicroStrategy, Michael Saylor's company, where that is selling shares to buy Bitcoin. And then there's been a lot of interesting comments about that company.
Yes, and he, by the way, I believe over the past 6 weeks has added another. It was significant. I don't want to say the number because I don't want to get it wrong, but it was a significant amount of Bitcoin that he went out and bought.
So we own that Circle as well.
Oh, do you? Great.
Bullish. We don't own Coinbase. We own Bullish. So it's kind of a play on the exchanges.
Yeah.
I am bullish on Bitcoin over the next decade. I do think it's possible we hit $1 million on Bitcoin in the next decade or so. The thing is with my clients, a lot of them like holding physical gold and silver. Bitcoin's kind of the same way. Even though I can't own directly Bitcoin for my clients because I'm not going to store it on a hard wallet for my clients, it's, I think, illegal. I coach them on how to actually put it on a ledger to own their actual crypto and actually get it off the exchanges. So, when it comes to Bitcoin, again, Reagan 2.0, we're still deficit spending trillions of dollars. That's going to devalue the U.S. dollar over a long period of time, and Bitcoin's one of the best hedges against the entire system.
What does that mean for gold, though? $4,500 on gold. Can't get over that.
That's the thing.
Silver close to 80.
Bitcoin is so small, too. It's a $2 trillion market cap. It's half the size of NVIDIA. People don't realize how small Bitcoin and crypto still really is relative to gold's market cap of, what, $35 trillion probably now at this point?
Cheryl, I feel like you jinxed me. Break, you asked me if I ever found my password for my digital wallet, and I said no, I'm still looking for it. So TBD.